I now hand the conference over to Mr. Anshuman Gupta from Investec Securities Limited. Thank you, and over to you, sir.
Thank you, moderator, and good morning, everyone. On behalf of Investec Capital, I welcome you all for the Natco Pharma 3Q FY21 earnings call. Today, we have senior management represented by Mr. Rajiv, Vice Chairman and CEO, and Mr. Rajesh, Vice President, Investor Relations and Corporate Communications. Over to you, Rajesh, sir. Thank you.
Yeah, thank you, Anshuman, and good morning and welcome everyone to Natco's conference discussing our earnings results for the third quarter FY21, which ended December 31st, 2020. Hope everyone is doing well as we are finally hopefully recovering from the COVID scenario. During this call, we may be making certain forward-looking statements which are predictions, projections, or statements about future events. And anything said on this call which reflects our outlook for future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the company faces. I'd like to state that the material of the call, except for the participant questions, is the property of Natco, cannot be recorded or rebroadcast without Natco's expressed written permission. We'll begin the call with results highlights and then we'll follow up with an interactive Q&A session. Hope you've all received the financials and the press release that was sent out yesterday. These are also available on our website. So for the third quarter, FY21 ending December 31st, 2020, the company recorded consolidated total revenue of 386 crores as against 513 crores for the same period last year. The net profit for the period on a consolidated basis was 63.4 crores as against 104.4 crores same period last year. As we mentioned in the release, the decline is primarily due to two reasons. One was due to lower sales in the domestic oncology. The second, due to weak realization of profits from our oseltamivir product in the USA. The segmental split for Q3, API, we have 97.8 crores. Formulation domestic total, 95.3 crores. Formulation exports, which includes the profit sharing and the foreign subsidiaries, 162.1 crores. Other operating and non-operating income, about 30.8 crores. Thank you all. We'll open up for Q&A now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, please limit your questions to 2 per participant. Should you have a follow-up question, would request you to rejoin the queue. The first question is from the line of Sudarshan Padmanabhan from Sundaram Mutual Fund. Please go ahead.
Yeah, thank you for taking my question. Sir, if you can give us the breakup of, between oncology, non-oncology, third party, and also give us some flavor with respect to the P&D this quarter.
We're not doing a split of the segments, but combined sale of the domestic oncology is about 90. One second. Rajesh already brought it up. I think the domestic sale is about 95 crores. Like 60%, usually 50-60. We don't do the exact split, but majority of it is usually coming from oncology. And now I think our cardiology is also doing reasonably well, and our expectation is that cardiology should hit about 15 to 20% of our sales.
Sure. And with respect to oncology segment, if one is looking at it, even at 50, 60 or 70%, this seems to be a kind of a waning proportion right from the first quarter. I understand that it's because of COVID. But can you give some color with respect to, are we seeing any signs of recovery over here? When are we expected to see that 90 to 100 crore kind of a run rate back?
I think the challenge with oncology is this. I think what is happening in that business is things are better. I think it's not that things are not as bad as it. It's at 70% is where we are. Let's say we're doing X earlier. We're doing about 70% of X in oncology. The reason for that is there's a lot of fear for coming for especially hospital therapies, and I think a lot of people are preferring oral therapies. And I think the higher margin products, which are the injectables, we're not getting that sale. And so as you know, COVID is there. I think there's a lot of reluctance. Things are getting better. I will not say that they're not getting better, but I think it's a process. I think over the next 6-8 months, I think things should improve. And that's the nature of the beast. We're learning as we go. And you're seeing that. See, what has happened with COVID is a lot of ICU, transplant, these sort of diseases where there's a lot of immunosuppression. There's been a dramatic drop in sale. I'll give you an example. We used to sell a couple of products for BMT, bone marrow transfusion. And practically for 6 months we had zero sale in that division, So because there was very little transplant happening because of COVID. So these are all very peculiar circumstances. There's no I can't answer it in any better way. But my sense is I think once COVID settles down, I think we have to live with some amount of COVID. But I think if things normalize, I think things will come back to some level of government.
And is the drop in international business largely an account of Tamiflu, or I would also understand a part of, since we also have a very strong, disposition to oncology in the US, would there be a little bit of a lower uptake than what we had expected there as well for the similar reason?
US our uptake is mostly oral, so that result has been more stable in oncology. Injectable uptake is more in domestic rather than export. That's answering first part of the question. The profit share is lower primarily because Tamiflu has been very, we had practically very little income on Tamiflu this quarter. I think that's one of the biggest reasons. Usually what happens in our earnings is the first 2 quarters we book the raw material and the supplies, and the last 2 quarters we book the profit share. And so this quarter, I know, obviously it's been weak. Hopefully we'll see if this quarter improves. But, it is what it is. So because of the nature, a lot of people are not coming out. So when people don't come out, they're not picking up flu. If you don't pick up flu, then no one gets the product. So you're seeing that across a lot of therapies. A lot of, because people are now going out, for example, chest infections are lower, or, during peak COVID time, there were very little accidents, so there were a lot of less ICU, requirements. So these are all, very peculiar circumstances, but I think things will settle down as things go by. But that's the present situation as the way we see it.
Yeah. Just one question from my side. If I break it into 2 parts.
That's okay. If you don't mind, we'll just.
Okay, sure.
Thank you.
Thank you. The next question is from the line of Viraj Kacharia from Skill Ventures. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations for reporting such numbers in such challenging environment. I just had one follow-up on the domestic oncology business. So if you can just give some perspective compared to our sales, how much would the market degrown? And, has we lost any share in oncology in products? So, if you can just provide some color on that. Thank you.
I don't think we lost any share in the oncology market in terms of market share. I think our brands have been fairly steady. I think what we have lost is mostly to do with the fact that there's limited, the hospitalization has been low. So I think that challenges you're seeing across the sector. Look at the hospital sector and, you look at these segments which require heavy hospitalization, which there's immunocompromised situation. Those products their takeoff has been much slower than it's happened not just in India. If you look at the global scenario, it has happened in the US, and I think there are other peers you could have seen their earnings that there's an overall hospital-related therapies there's been a decline.
Okay, just one follow-up on this. So, if you look at HCG and, other players, they've reported a more normalization and sales by now. So when we look at this business, in its entirety, say for FY22, should we be back to what we were doing, say in FY20, kind of a 100?
I think so. I think what we are betting on is 2 things in domestic market. One thing is that things will settle down. I think things are slowly settling down. And our cardio and dermatology is doing reasonably well. So that is also improving the strength of our base earnings. And see, our idea is to diversify our revenue base. I mean, we've spoken about that many times in the previous call. That we need to diversify our revenue base so that there's more consistency in our earnings. I think one major item that we're going to add in domestic, which is not in pharma, but it is in agro. I think that's where we are very excited because we have a couple of launches lined up, very interesting launches lined up. So if that were to start kicking in, so that makes it much more interesting.
Okay, I wish you good luck. Thank you for yeah.
Next question, please.
Thank you. The next question is from the line of Mitesh Shah from ICICI Direct. Please go ahead.
Thanks for taking my question, sir. The Tamil flu was low in Q3. So what is the current situation now?
I don't want to judge it now, my friend. I think let's wait for the quarter to end, and I can speak about it at the end of the quarter.
Okay. And about congratulations for your first approval in the crops. So can you give some directional guidance or the outlook about this segment and how you market these products with the partnership or someone? Can you get some outlook on that?
Sure. I mean, what we're thinking is, I think the real value in this business is going to do if you're going to do your own brand and launch these products. I think that's where we're looking at. And as you know, we got our first big approval, so we're very excited about this. We also know there's a court case pending on it. So, and I think we released a press release saying that we'll talk about a launch plan shortly. I think that's our position. We'll come back exactly, what we want to do because the court case is pending. I don't want to speak too much in this call at this time, but our expectation is that we'll be able to overcome our legal hurdles, and then I think we should be in the market in the coming Kharif. I think that's our expectation.
Okay. And do you just have a particular company with the court case pending, or do any other competitors are there in the litigation part?
I'm not aware of other people. I can only speak about myself. I think we are in the first wave for sure. I think that's my understanding, and I think we have a good position. But again, I don't want to speak much about this product because the legal case is pending. I'll come back with our plan shortly. Yeah.
Got it. Thanks, sir. Thanks a lot.
Thank you so much. Thank you.
Thank you. The next question is from the line of Nimish Mehta from Research Delta Advisors. Please go ahead.
Yeah, thanks for giving me an opportunity. Just a little bit more on the agrochem business. What I understand is that we are focusing on pesticides more, and given that the government stance is against using pesticide, trying to promote more of organic manure and everything. What do you think about the overall opportunity? I know you can't speak about specific, but overall general understanding would really help.
No, what you asked is a very good question. I think we're very clear in our strategy. I think we have the products that we're working on are obviously it's a pesticide, but we also have a pipeline of products which are also more environmentally friendly and less toxic to human consumption. I think I'll speak about it shortly. I don't want to speak about it in this call today. But I think clearly the emphasis that you raise is very important. I think the opportunity in this business is not selling, toxic pesticides. The opportunity in this business is actually selling, greener pesticides. I think absolutely. I think your pipeline, anybody to be successful in the coming decade, you need to have a pipeline with a mix of both. Having said that, you can't go away from a traditional pesticides, but you need to have a mix of products and portfolio, and this is where the world is moving. Absolutely correct. But in terms of strategy, Nimish, I'll speak about it as we go along. I mean, we're still early days, so I like to speak about it, but you will hear. I think you will hear some commentary from the management in a short period of time on what our strategy is. Absolutely, you're absolutely right. Okay.
Okay. No, thanks very much. Yeah. Thanks.
Thank you. The next question is from the line of Sameer Shah from ValueQuest. Please go ahead.
Yeah, morning, sir. First question is on Revlimid. We had a TAD in December, so where are we on Revlimid?
Good question. I think we believe, again, I'll reiterate it again. So I don't want to jinx it by saying it all the time, but the approval is around the corner. There's nothing serious pending. They're all minor queries. We've answered everything. There's nothing pending on the company, on the company's part. I'll like to reiterate it again that we will get the approval, and I think we're very confident we'll get it. and I'm hopeful it'll come very shortly.
Good. And sir, secondly, I mean, whatever initiatives we were doing either in India or the other markets like Brazil, Canada, etc., was going to be on top of what our base business is. Now, given what it is in this quarter, the base business is actually, there are question marks on whether that base business will normalize, or will these initiatives like agrochemicals and other stuff will actually bring us back to the previous level, or is there, from whatever initiatives we have, will we actually be in growth phase from 22? What is your sense?
I think, there are a lot of moving parts here. You should understand the generic business. The core portfolio will always degrow by 10 to 15%. That's the challenge of doing generics. So I think that's how the business works, and everybody knows that. So I think what we're trying to do is two things. We're trying to expand the portfolio so that and also build a stronger domestic portfolio where the price erosion or depreciation of the portfolio is not lot less compared to the export business. I think that's why our agro initiative. So in terms of strengthening the base business, I think agro is going to be very critical. You're absolutely right. The agro will pull us back and give us that strong base business that what we're looking for. Having said that, in addition to that, we're also very bullish on the launches that we have. We have lenalidomide launches in multiple markets other than the US, so which we're very excited about. And Epicnor launch is there in the US in the next financial year, so that also is a very good launch. So Epicnor for the lower strength we're expecting soon, and the 10 milligram will also, I think, go generic by in the financial year 21-22. So we have very good launches there as well. And of course, the jackpot is always there. The lenalidomide launch in March of 22. So that it will be coming in the end of the year. But however, we'll be booking the earnings at the end of the year. So I'm extremely bullish of 22, and I think what we're seeing is a challenge in a quarter or two, but it is not going to persist for long. I think, but it is what it is. I mean, I'm not going to run away from it, but it is. But what I'm trying to say is that we are very cognizant of what is going on, and I think we're aware, and I think we'll be able to pull it back. And because of the pipeline that we have had, I know we have publicly announced already that we got approved for one big product. And we have other big products in agro, which we'll speak about in a short duration of time. So I'm extremely bullish about 22. Yeah.
Right. So I have more questions. I'll come back and let you. Thank you and all the best.
Thank you. The next question is from the line of Ashish Thavkar from Motilal Oswal Asset Management Company. Please go ahead.
Thanks for the opportunity. So could you elaborate more on Brazil and Canada as to, how do we see the growth ramping up in the next 1 or 2 years? And between Canada and Brazil, which markets you feel are easy to ramp up?
Both are, Brazil takes longer, but I think your results will be much better over a period of time. I think the foreign subs now, US business is booked on our annual balance sheet because we don't have our own sub in the US. The foreign subs cumulatively have done about 41 crores in last quarter. Yeah, so we're doing well in the foreign subs, and all foreign subs have been cumulatively profitable. Brazil is profitable this quarter. Canada has been profitable for long. So I'm happy where things are going. We have some very good launches lined up next year in Canada and Brazil. So, so what is our run rate in our own sub? It's for 40 a quarter. So if you annualize it, we're doing about 160 crores. So where do we see this business going? I believe this business can go to 250 to 300 crores next year. It's based on the launches that we have had. So I think that's based on our expectations.
Yeah, this is very okay. Good. Sir, on the agrochemical side, if you could help us, what are the 9(3) products we have which are in the pipeline, and what could be the addressable market?
I think we only spoke about, chlorantraniliprole right now. I think the size of the market, from what our understanding, is about 2,000 crores. It is there in the press release. And what our future pipeline and all, we're not revealing at this time for strategic reasons. I'll speak about it shortly as we go along while we're getting registration. But I'm very bullish about the opportunities. A lot of these opportunities, my friend, we're looking at things where we're going to be first to launch. See, as I said, I'm not trying to do a commodity business, and everybody thinks of agro as a commodity business, but Natco I never do business where we believe something is a commodity. We always look for niches. We look for sweet spots look for opportunities where a lot of people are either not, where we believe will be in the first wave. So we're very excited about the opportunity, and I think we are going to see some positivity in that business in the coming 30s.
Yeah, thank you. This helps, and all the best.
Thank you so much. Thank you. Next question, please.
Thank you. The next question is from the line of Rashmi Sancheti from InCred Research. Please go ahead.
Yeah, thanks for the opportunity. Just to clarification on the domestic business again. Sir, I can understand that, chemotherapy sales might have affected, due to COVID. But in oral oncology segment also, are we seeing degrowth or we have seen recovery in the growth?
I think oral oncology has been more stable compared to the chemo.
So on YOY basis, we are growing in that segment.
Yeah, in that segment we are doing reasonably well, but overall in onco we're degrowing because of the chemo challenges. Yeah.
Okay, sir. Sir, and on the international front, just want to understand on the Pomalyst product, where you have already settled the litigation also, and so any plans? Have we launched the product? Are we planning to launch the product?
We already have an approval on that product. We have a settlement with the innovator. The settlement date is confidential, but we have a settlement with that product. And that's all
it is not. Okay, so it is not going to be a 2022 product sort of.
I think I'll speak about the launch when it comes closer to the launch, because the launch date is confidential, is bound by confidentiality. I think when it comes closer to launch, we'll speak about it. This time I can't comment.
Okay, sir. That's it from my side. Thank you very much.
Thank you.
Thank you. The next question is from the line of Ankush Agrawal from Stallion Asset. Please go ahead.
Yeah, hi sir. Thank you for taking my question. Firstly, if you can help me, share some thoughts on how do you see the Revlimid market moving from 2022 to 2026 till the time it goes generic, in terms of how the pricing pressure would be and how you see market share moving between you and other players?
Sure. I mean, it's there in the public domain, my friend, but I'll just rehash it, repeat it for your benefit. So basically the agreement says that we can increase limited quantity in March 22, and the quantity keeps increasing every year till it becomes open in 2026. And our belief is that our launch will be before other generics. I think that's our expectation. And I think we should have the first mover advantage.
Yeah, right. So any thoughts on how do you see the pricing pressure moving between you and competitors? Any thoughts there?
Again, I don't want to say anything about that at this time. When the launch happens, I think we can add more color to it. But I think it should be a very good product. I think that's our expectation.
Okay, fine. Secondly, how do you see the long-term sustainability of the business model that you operate on? I mean, we typically go for big opportunities wherein at the time of launch we get a huge jump in our business, and then over time it kind of falls. So as the business size is growing up, every time you will need a bigger opportunity to not just to get back on the old revenues, but to even grow over that. So how do you see that playing out over long term as our business size grows? Do you see a hindrance over there?
I think, it's a challenge because our strength has always been delivering the niches. So I think the niche business will also have its own value. I think, as you rightly said, there are huge upsides to get, and I think that is the basic DNA of the company. So we continue to do that. But having said that, we're very cognizant of building the base business. I think that's why we've been working very hard to diversify the portfolio in domestic by adding agro. So we're trying to do, we're doing this foreign subs so that we can diversify revenue. Say foreign subs are now representing almost 7 to 8% of revenue this quarter. So we are trying to diversify revenue so that there's, so that the dependence on the one-offs will be less. And but I think over a period of time we'll be able to achieve that. I think it won't happen overnight. I mean, I can be honest with you that. But I think the endeavor is to do that. I think endeavor is to build a base business which is always steady, and then the upside gets added on the top. I mean, that's the objective.
Got it. Thank you. That would be all.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, thank you. One question on the India business. You mentioned the trends in this quarter, but if I see the sales from 1Q to 3Q, it's been a declining trend. So I would have imagined things would have only improved right now versus, so we had a higher sales in 1Q and 2Q than what we had in 3Q. So that's what I am not able to understand.
I think sometimes in particular quarter we tend to have stocking of a particular product because we're launching a new brand. So that's why there's a difference between one Q to a different Q.
But if you look at just the oncology segment, you would say that 3Q oncology sales would have been higher than 1Q and 2Q?
Could you repeat that question again? Sorry.
So I was asking, if we look only the oncology part in India, that in third quarter oncology sales would have been higher than 1Q, 2Q, or would have been lower than 1Q, 2Q?
It started off at a higher number. It settled on a lower number because we did stocking in the previous quarter. So let's say we're launching something. So to build the market, we tend to stock a little more. And once it becomes steady state, you do a lower sale. And we launch a lot of products at risk. So we're very aggressive when we launch. So I think that's the reason why there's a up and down in the sale numbers.
Okay. And second, on the export business, would you so Tamiflu I can understand, but very high number in second quarter was also a reason why some of the numbers in this quarter are very low on the formulation export business also.
What happened in Q2 is different from what happened in Q3. So Q2 had, we've spoken about that already. We had the benefit of the settlement. So I think that's why the difference is there.
So Copaxone will be more stable product for you, or does it also, when you get the profit sharing on that also varies so significantly across quarters?
Like this quarter tends to be lower. Sometimes they have like year-end adjustments. So for example, you could have a chargeback adjustment. So one quarter could be low. So a lot of these things you can't trend on a quarter-to-quarter basis, my friend. I think you have to look at it over multiple quarters and take an average. To start looking at numbers on a Q1, Q2 basis and say Q1 has moved this much, Q2 has done, it's not a fair comparison because our portfolio is not a diversified portfolio like the other big companies that you follow. They're very heavily concentrated. So if you don't get one profit share in one quarter because you build more in one quarter, build less in another quarter, then the difference becomes too apparent. So you can't catch a trend. I think our balance sheet cannot be judged like the others. You have to look at a longer trend. I think that's what I would say. Because our portfolio is heavily concentrated. If something doesn't happen, it directly shows on the balance sheet.
Sure, thank you. And just one last clarity on generic Imbruvica launch. When is it expected? First half next year or second half? Have you talked about that?
No. We've not spoken about Imbruvica at this time. We just had a court case for which went to trial. We're waiting for a verdict. I think we'll speak about that once we get clarity on the legal side. At this time, I have not spoken about it.
Sure. Thank you.
Thank you. Next question, please.
The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Thanks for taking my question. Rajeev, two things. On the India business, when you look through FY22 and 23 maybe, what does the new pipeline look like? Is it both in cardiac diabetes and in oncology?
Do I say that again, Mr. I didn't catch your question. So how do I see FY22 domestic? Is that what you're saying?
Yeah, the pipeline in terms of new launch opportunities.
I think we see a lot of interesting opportunities. I think we have planned about 10 launches in the next financial year. Some of them are first time in India launches. And the launches are primarily, as you said, in the oncology and the cardio segment. I think that's where we are looking at.
Okay. And so, earlier we had an aspiration of 1,000 crore there about domestic business that you've alluded to in the past. I mean, given how things have played out, how do you look at the target now and how, in terms of what kind of time frame it's potentially is a number that's achievable now?
I think the challenge that we have there is the multiple. See, one is that the Hep C portfolio has dropped dramatically. That's one challenge we've had. Another challenge that we've had is that the domestic oncology is not done as well as we thought because of COVID and other challenges that we've had. So the way we're looking at this business is we needed one or two things. This is what I'm giving a general vision for that business. We have always covered only specialists. I mean, that's the uniqueness of our model, that we have covered with 200 reps. We have built, the size of business, which is, a lot of people for this sort of turnover tend to have 5 times, 6 times the number of reps that we have. Because we always, and the number of reps we have had have been, in few hundred. We never had 1,000, 2,000, 3,000 reps. So for us to go to the next level, we have to do one or the other. One, we do an acquisition, which allows us to build scale, which allows us to have higher coverage and more therapies, and then we add new products to it, and then we grow the business. Or two, we need to add many reps and start new divisions. I think unless we do these two, the needle is not going to move dramatically. And I think we have to I'm looking at both options, but obviously we added one segment, so we need to see when will we enter into a more larger, mass market segment where we cover gynecs or, today we only cover, for example, only cardio, dermato, onco, and gastro. I mean, practically, it's a very small segment of doctors. We only cover, let's say, 3% of all doctors. So I think if the sale has to increase, then we need to go and attack a larger market. So anyway, I'm thinking of different options, but I think that's where the future lies. It's one or the other. I think either we do a larger market coverage or we do an acquisition which allows us to get it. I think that's where we are.
Thanks. And secondly, on the US, so how is FY20 been? 21 been in terms of filings, and 22 the next few quarters, anything interesting sort of lined up from our R&D perspective?
We're targeting quite a few interesting filings. We're targeting a lot of few first to file. I think we always have a run rate over 6 to 8. I think we're confident we'll have something interesting. What they are and all, unless we file and we get the first to file position, will be difficult to say. But we're working on. There are a lot of ideas we're working on.
Anything that we filed this year, Rajeev? So
no, nothing that is interesting. No.
Okay. Thank you. That's fine.
Thank you. The next question is from the line of Nikhil Mankur from Ambit Capital. Please go ahead.
Hi, good morning, everyone. I have a slightly larger picture question on the domestic oncology market. What do you think about the competitive landscape, the way it is shaping up in the domestic onco? Are you also seeing that some of the competing firms which have broad portfolios in oncology space in global markets, they are getting a bit more aggressive in the Indian market as well?
Could you say that again, my friend? Your voice is a little muffled, so I couldn't catch what you said. Could you say that one more time, my friend?
Is it better now?
Yeah. Could you repeat that question one more time, please?
Yes, I'll do that. Yeah. So my question was on domestic oncology. What are your thoughts on the competitive landscape in this space in India? Are you seeing many of the competing firms who are there in the global markets with a wide oncology portfolio getting a bit aggressive in the domestic market as well?
I think the multinationals have always been there. I think our competitors are primarily Indian companies because we sell generic versions of drugs. I think that's our business model. Are the multinationals active in India? Some are active, some are not active because a lot of these oncology drugs are very expensive. So sometimes the market is not large or interesting enough for them to do registration in India because some of these therapies are sold for $3,000, $5,000, $10,000 per month kind of therapy. See, our model is to go after patents, isn't it? So I think that's where we are. So there are opportunities in onco. I think we are doing mostly chemistry opportunities. We're not doing the biotech opportunities. So I think that way we have limited ourselves in scope. But there's still a lot of opportunities in the chemistry space.
Okay. And just a quick question on agrochem. Now, see, my understanding on the agrochem side is fairly limited. What I understand is the CTPR-based molecule. I think it's a bit complex in manufacturing because it's a technical product. While I don't debate the manufacturing expertise that Natco can bring in this kind of a molecule, but what I want to understand is from a marketing or a distribution standpoint, given that you are looking to build a brand in this particular space, how are you going about this? I mean, whether any hirings you're undertaking or what kind of organizational capability boost on the marketing distribution side is Natco looking to build?
We have actually built capability in the last 1 year in anticipation of this launch. So we built the reps, we have nearly about 100 employees now in that division. So we have, and we're doing a lot of, promoter boys we're going to hire for the coming Kharif season. So we have geared up for the launch. We have hired seasoned hands from the industry who are part of this agro division. See, the real value, my friend, is when you do the front end. Otherwise, where is the value? If you're trying to be, give it to them on a principal-to-principal basis, where you might do it, but there's no value on it. So my thinking on this is, do your own brand and try to be the first wave brand to come in, so that there's a differentiation that you can give to the distributor and farmer, so that you don't become one in the crowd. So I think that's the strategy. And I think when you launch something interesting, customers will come to you. And so I think that's what we're trying to do. And so then the question is, we don't have to think, if you ask the question, you don't have a setup, will you be successful? But it's a chicken and egg question, no? Unless you do it, you will not know, right? So, but my whole point is that you're doing it, and somewhere you have to make that bet and do it. And then as long as you offer something unique, you'll always stand out in crowd. And I've always seen that any business, you stand out, do something unique, and where you're in the first wave, you'll always be able to create a new market for yourself. Okay?
Okay, sure. Thank you so much.
Thank you. The next question is from the line of Ravi Dharamshi from ValueQuest. Please go ahead.
Yeah, hey, thanks for taking my question. I wanted to just go back to asking the question on the competitive scenario in Revlimid, but I want you to give a more generic answer, not necessarily pertaining to Revlimid. Have there been other instances where large number of generics have settled with the innovators and such kind of a competitive formation has happened? If yes, then how did the market pan out over there? If no, then I would like to know, how will the competition work over here? Usually the generic players want to get onto the formulary list. They have a short supply or something like that. So in this particular case, will there still be like a proper competition between generic players? How will it work?
I think until the market formation happens, Ravi, I can't answer that question. What I can tell you for sure is we're going to launch first. I think that's very clear. Because I'm going with the press releases that are given by the other companies that they're launching later than us, so which is good. So what I can assure you here is that we have the first mover advantage. First mover makes a lot of difference because you're obviously there in the formulary ahead of everyone else. And as your market share keeps increasing, you will be able to keep good business. I think that's our expectation. How many guys will come when and all, this is a question that only time will tell. I think we can answer that question, but with time. But I think for the start, I think we have a good advantage in the beginning. I think that's what we can say.
Just to follow up to that, is there a motivation or is there an incentive at the end of the guys, those who come in later? They will have problems selling their quantity and they'll have to reduce the prices for that? Or is that everyone is assured of particular set of quantity and there is no need to reduce prices? Is my understanding flawed?
Again, Ravi, I'm not privy to what others have settled, so I can't answer that question.
Right.
I can't.
And how will Celgene keep tabs on everybody's volumes and quantities?
Ravi, that's a question you should ask Celgene, not me.
But they would have told you, right? You're supposed to report or something.
No, Ravi. I can only tell you what I said. I said we have the first mover advantage, and our quantities keep going up. And the other competitors are coming later than us, and that's all I can say. Yeah.
Okay, sure. Thanks.
Thank you, sir.
Thank you. The next question is from the line of Kasira Brijesh from Mirae Asset. Please go ahead.
Yeah. Hi, good morning. Thanks for taking my question. Am I audible?
Yeah. Go ahead.
Yeah. Rajiv, just one question on the domestic business. The oncology, the indication that you gave, we are doing somewhere around 60-odd crores a quarter right now. If my understanding or my memory serves me right, a year back, we were doing somewhere around 90 plus per quarter. Right. So, are we seeing some traction in the domestic business at this point of time? So as we can assume in FY22 very easily that we'll be going back to the earlier levels at least very soon.
Hopefully, my friend. I think hopefully. See, pandemic has really offended a lot of our businesses. And in overall businesses where there's chronic usage at home, those businesses have done extremely well. Businesses which are linked with hospital, which have heavy immunocompromised situation of critical surgeries, those businesses have not come back to normalcy. So, COVID is something that I'm not able to guess where this is going. So
what I'm asking is maybe on the trend line basis, since, month on month we will have, some clarity. Right now we are sitting in February.
At a macro level, my friend, I'll say that things will be better in 22 because things are more normal now. I know what we're dealing with. Now to say that, I know what is happening and things will come back to normal eventually, and that's our expectation, and that's our, obviously that's our expectation. But to say that if you want me to give a more emphatic answer, I don't want to say it. I think that's our expectation. I think I'll leave it at that.
Sure. So, one second, last question on the overall FY22, the confidence that you have on FY22 would be phenomenally better. So if I leave aside revenue, which would come in Q4 FY22. So will that confidence would be mainly on the domestic business actually coming back, the agro business starting to contribute in a meaningful way, and the ethanol launch in the US? Are these the three triggers that I should presume, or there are any more?
And also we have we have lenalidomide launch in other markets also. So what you covered is more or less are the major triggers. That's correct. Yes, absolutely correct.
Sure. Thanks a lot.
Thank you. The next question is from the line of Aditya Khemka from InCred Asset Management Company. Please go ahead.
Yeah, hi. Thanks for the opportunity. Hi, Rajiv. Rajiv, on the question on the India business, a lot of companies talk about first to launch molecules in India, and all of them say that they've launched 5, 6, 10 first to market molecules in India. What I want to understand from you, and you're pretty much making the same suggestion on cardiology, which you've already done, and some of the other segments which you may want to target, and where you again, I'm assuming you feel that there are some niche molecules, the first to India molecules that you have. My question is, how large is that opportunity set? How many are molecules which are present across the globe but not present in India, present in some countries and not present in India, that all these pharma companies, including yourself, can continue to launch first to market molecules over the next 3 or 5 years?
See, there's two things in domestic, my friend. One is you can do first to launch, but most products in India, you end up in first wave. You can't be like the only person who launches, because they give it to multiple, a particular manufacturer gives it to multiple licenses. So tend to be about 5, 6 or 8 guys launch in the first wave. So typically, but obviously, if you want to be in the first wave as opposed to be in the second wave, that's what happens to most domestic molecules. Another thing that could happen possibly is that if it's a difficult chemistry or a difficult patent challenge, and you do something very interesting, you can try, then you are in the first wave, then you end up being one of the two or one. So that's where the real opportunity is. But what will be in the first wave, or whether you'll be the only one and all, you'll not know until you actually launch, isn't it? Because you can't control what other people's behavior is, isn't it? See, let's say you think you'll be the only one in there, but let's say some other smart person also thinks of the same thing at the same time, then obviously it gets diluted. So the way this business works, it's true even in the US as well, is you keep trying 8 or 10, somewhere in between you'll get something where you'll be the only one, and sometimes you'll get somewhere with a lot of competitors.
Understood. You didn't answer my question on how large that opportunity set is.
Large means, my friends, I tell you what it is. If it's like 6 or 8 guys, then obviously the brand won't be so large. But if you're going to be the only one, then sometimes you get a 30 crore, 40 crore brand. But if it's a highly competitive brand, then you end up doing only 3 or 4 crores. So I think I've answered in a very philosophical level. I mean, the opportunities are, based on, the circumstances. Like, there are people who have made, 200, 300 crores when you do something like a remdesivir or a favipiravir, right? I mean, the opportunities can be, based on the circumstances and where you are. So it's hard to judge, but typically a success in domestic is anything between 10 to 25 crores is considered a success. 2-3 crores is a Me Too launch. 50, 60, anything over 50 to 70 crores is a super success. I mean, if you want a great success.
Right. Now, my second question is on Copaxone. So Copaxone, if I remember correctly, reading Teva's press release, they're still doing about $1 billion on an annual run rate basis in the product, being the innovator and all. Is there any constraints to you and your competitor in generic space gaining market share from the innovator, or is it just Teva's authorized generic is doing that kind of revenue?
See, again, I can't speak about Teva's balance sheet because I don't know anything about it. I can only speak about ourselves. I think from what I understand, we have about 30-35% market share. I think we're doing reasonably well for a product like this. And so I think we are happy with where we are. And
sorry to cross question here, Rajiv, but my point was that you have 30-35. The other generic also has 30-35, which implies that the innovator is also sitting with 30-35, which is very unlikely what we have seen in the past in terms of patent expiries, right? Once the generic competitors launch, the market share for innovators generally go in single digits. So I just wanted to understand from you as to, is there a constraint from you, from your side, in gaining further market share in Copaxone, or do you not want to engage in price war and therefore you want to keep the market share low, keeping the
these
price?
Are not like, I think, let me answer your question in a different manner. These are not like a Me Too generic when tablet where everything gets substituted immediately. There's a, you need to sell to the patient, you need to register the app, you need to have an auto injector. There are a lot of subtleties in selling it. It's a specialty product. It's not like a Me Too generic. So it's not strictly comparable to where I have 50%, 60% market share that you get overnight. So that's the first part of your question. I would believe we're doing reasonably well. I think that's the best way I can answer your question. I think I don't want to comment further than that. Okay.
Thanks, Ajay. All the best.
Thank you. Yeah.
Thank you. The next question is from the line of Nikhil Upadhyay from Security Investments. Please go ahead.
Hi, Rajiv. Most of my questions have been answered. Just two things. You mentioned in Brazil and Canada, we were at 160 run rate yearly, and you believe we can touch 250, 300. And if I go back to our commentary in FY20, before the pre-COVID, we were pretty sure that Canada and Brazil should start scaling up in FY21. So is it like the launches have got delayed, which we believe should come in FY22, or is there some large products? What gives you the confidence that we can, because we are talking of almost doubling the revenues there?
Based on the launches that we have, and see, basically these are all positive statements, I think, based on two assumptions. One, we'll get the approval on time. The market formation will have limited amount of competition, and then we'll be successful in some of the patent challenges we're doing. Based on those assumptions, yes, that's our expectation.
Okay, and multiple times you've mentioned that lenalidomide launch in multiple markets. Is the market opportunity large enough, and would it be like competitive, like normal product, or do you believe it would be limited competition? If you can just help me understand the perspective there.
It's going to be limited competition, but it's a high value product. So even if you do small revenue, I think it will be fairly profitable. So I think the gentleman asked me what other big launches I have next year. So I think that's what, in that conjunction I've answered that question. Yeah.
And we are close to approval in those markets?
Some of the markets, yes, we are very close to approval. Yes.
Okay, thanks a lot.
Thank you.
Thank you. The next question is from the line of Kunal Mehta from Vallum Capital. Please go ahead.
So thank you very much for the opportunity. Just wanted to understand firstly regarding the recent settlement. On Revlimid, I think there are only two REMS available right now. One is of the innovator and one is the one which we have filed with Teva. So I think the recent settlement with Cipla, the Cipla has been allowed to use the REMS belonging to the innovator. So just want to understand from a competitive advantage standpoint in terms of gaining more market share, will the REMS make sort of a difference in the playing strategy? Because I think if Cipla is getting the deal, I think other people who are going to settle are also likely going to use the innovator REMS. So would REMS make a difference?
Sorry to interrupt, Mr. Mehta. So this is the operator. There is a disturbance coming from your line. I would request you to mute your line while the management answers your question.
My friend, I didn't understand everything, so I'll rephrase that question. So just affirm whether I understood it correctly. You're basically asking me, by using the innovator's REM, do we have an advantage? Is that correct?
No. So do we have a disadvantage because we have set up our own REMs and other players are going to use the innovator's REMs?
No. We are using the innovator's REM. I think my understanding is that we're using innovator's REM.
Okay. Okay, understood, sir. That's okay. Okay, so we are on the same plane as the other ones who are going to use innovative REM. So that will not make any disadvantage when it comes to maximizing our share potential.
Yeah, I don't think we are in a disadvantage.
Okay. Second thing I wanted to understand was on the India business. So when I look at, of course, the only data point I'm studying, I have to observe this right now is the AIOCD numbers where the hospital revenues are not tracked actually. But when I look at the in Onco, when I look at the growths of other players, players like Zydus in the domestic market, even during these last 6 months, I think they have been able to do better than what we are doing. So just wanted to understand. A lot of these big guys, guys with big marketing force and ability to do very well in a specialty space if they want to. So a lot of these big guys, and also their potential to sell a basket of products to the hospital segment along with their biosimilar portfolio and the chemistry portfolio. So just want to understand, are we when you look at the market share for the oncology products on both, of course, hospital picture is not yet clear as to what will emerge. But and when it comes to the oral products, how confident are you that we are not losing market share in these products?
I think we're doing reasonably well, and I think I'll just come back to what I said earlier. I think we're doing reasonably well. And I think once this COVID issue settles down, I think the oncology would bounce back. I think that's our expectation.
Got it, sir. And all the best for the revenue activity.
Thank you. The next question is from the line of Sriram Rathi from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. Just one question on the APIs. Of course, it has been quite volatile. So, this quarter run rate of this 95 odd crores, this is the normal run rate that we should assume and growth over this base for FY22?
It depends on, there's a portion about 20-25% is coming from the tender business. The tender is not repeated, then the base will be a little lower. But see, honestly, Sriram, it's very difficult to judge how next year is going to be. I think closer to next year, I think we can speak about it. I don't want to comment anything about, how next year's sales are going to be. I think it'll make sense if you ask me in the May or June call when we do the final numbers for FY21.
Okay, got it. Thanks for that. And just one more question on the export business. It has been, of course, quite volatile for different reasons. But even excluding Tamiflu, we are at around 160-170 crores for the quarter. But we were doing like 200 crore plus 220 to 30 on a normal base generally every quarter. So anything apart from Tamiflu which has impacted this quarter performance, or it is only Tamiflu?
The biggest impact has been Tamiflu. General volatility is there, but we have had Lepactinib we have launched. We are the only generic on Lepactinib, so that has done reasonably well. So our expectation is, we'll have other products coming through. So, but I think if you were to point at any single particular reason, I think that is one of the biggest reasons for the volatility in the earnings here.
Okay, got it. So lastly, one thing only, on agrochemical, is it fair to assume that you will be able to make company-level kind of margins whenever you achieve 100-200 crore sales?
What kind of margin will you make? Is that what you're saying?
Yeah, so EBITDA margin can be in line with company's average for agrochemical?
I think that's what we're striving for, Sriram. I think that's our expectation. I think the kind of things that we choose are where the margins are good. I think that's what, our business model has never been to do commodities. But actually, how much money you make, again, is all, you can't really control that. But I think that's what we're striving for.
Okay. Sure. Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Thanks, and good morning, everyone. Rajeev, just one quick clarification on your comment on Revlimid. You mentioned that your launch will be before other generic players, and that gives you a competitive advantage. So just curious, because it's a volume limited launch, and you probably would be getting single digit market share. So what is that advantage that you have by launching before others?
We'll be the first generic, Samir. I think that's the advantage. So I think that's what we have pointed out, and we'll be before everyone else, because I'm just going by the press statements of the other companies. They have said that they'll launch sometime after March. We are launching in March. I think that's the point I was trying to make.
Fair enough, but it's quite it's not as though you can go and get 40, 50, 60% market share, and that's the advantage that you get by launching before others.
I think we never said that, no. I mean, I think if you look at the read of the Celgene statement now, what we have said is that we launch with a single-digit market share, which keeps increasing till 26 when we have unlimited share. The percentages are there in the public domain.
Of course, Rajiv, of course it is there, and therefore I'm asking you, if it's only single-digit market share that you'll be getting, then what is the advantage of launching before others? Let others also launch at the same time, just hypothetically. It makes no difference. Or is it the pricing that you have in mind? When others come, then you'll have to scale down your pricing. So I'm just trying to understand your comment. What's the advantage of having the market to yourself with just mid-single-digit market share?
I think, Samir, I think we're going to be the first generic, and the erosion will be low. I think that's all we're trying to say. And I think that's the only thing I can tell, Samir. I'm not able to understand what your question is. I think that's the best way I can answer that question.
Okay, no worries. Yeah. Thank you. Yeah.
Thank you. The next question is from the line of Rajat Sethia from Riddhi Capital. Please go ahead.
Hi. So my first question is, how confident are we about the guidance that we had given for the financial year 2022 in terms of 1,000 crores of PAT?
I think I'll speak about it closer to when we finalize the numbers, but it predicates on the assumption that we'll be able to launch Revlimid in that financial year, and also predicates on some success in our domestic on the agro business. I think that's the assumption. But I think when we close it, I think in the May call, and when the final numbers are done, I think we'll speak more in detail about what our assumptions are and what we think, how things are playing out. Yeah.
Sure. And do you think that would be the peak for the company, or you think from thereafter also one can company can expect to grow in profits?
I think what we have is we are trying to strengthen our business, and I think our percentage of quantity keeps increasing every year for Revlimid. So I think that will drive the earnings over the next few years.
So the other question is on the exports business. So basically, last quarter we did some 480 crores. This quarter we did 160 crores. I think are we saying all the revenue decline is attributable to Tamiflu and the one-time settlement that we got last quarter, or did we lose some business in Copaxone as well?
I mean, those are two. The reasons that you cited are the major reason of decline. Yes, that's correct.
Okay. All right, sir. Thank you so much.
Thank you.
Thank you. The last question is from the line of Vishal Manchanda from Nirmal Bang. Please go ahead.
Yeah, Vishal.
Thanks for the opportunity. Sir, could you give a sense on how large the oncology market is in India?
How big is the oncology market in India, you said?
Yes.
Honestly, I don't know, my friend, because the AICVD and all these numbers don't actually capture it. My estimate, I'm making a guesstimate, okay? So don't hold me to it. It's about 3,000 to 3,500 crores is what I understand informally, but again, I can't back it up with any validation from any agency. Okay.
Okay. Thank you. And sir, in the US, how many launches should we expect in the next 12 months?
How many domestic launches are you saying?
In the US, sir. In the US.
US launches next year in the US. At least, I think big launches, I have about 2 or 3. I think we already spoke about it. I think Efficnor and then Revlimid. But in addition to that, there's another interesting launch which is not publicly revealed, but I think the immunosuppressant is also there. I don't know when the exact launch date. I think we'll come back to that on the launch date. So I'll just come back to that. That's also an interesting one, the everolimus immunosuppressant. So let me get some clarity on the patent and the approval. But that's also an interesting launch we have.
So earlier you talked about everolimus. Is that right?
There's two everolimus products, my friend. There's the Epicnol product and there's the immunosuppressant. So the immunosuppressant is a different product. The oncology one is a different product. So there's two different brands and there's two different ANDAs.
Okay. And they can be launched next year, probably.
I don't remember, so you asked me what other interesting launch we had. That's the other one also we have, but the exact launch date and all, I'm not able to recollect. I'll just come back with you. Like top of my head, I'm not able to answer the question, but I'll just come back with you in the next conversation when the exact launch date is. I'll come back to you on that.
So are these approval is the hurdle, basically getting an approval, USFDA approval is the hurdle for these everolimus sponsors, Zortress and Methimeta?
I think so. I think the 7.5 and the 5 and the 2.5 is only launch and approval. The 10 milligram, if I remember right, again, I stand to be corrected, I think it will come, later part of 21, sorry. In the calendar, there's a launch date in later part of 21. And Zortress, I don't recollect what's holding it up. I'll just come back to you on that. Let me do some. I need to. Top of my head, I'm not recollect what's holding it up.
Okay.
Okay.
And what was the export formulation sales excluding profit share in the quarter?
Sorry, repeat the question again, Tushar.
What was the export formulation sales excluding profit share?
We're not giving the split. We're giving it as a combined amount.
So, but you indicated about 40 crores of sales in Brazil and Canada. So that probably is largely your export formulation sales. So is that fair to assume?
See, what happens in the Brazil and Canada is the sale from India gets cancelled out because it's sold to your own club. So that is represented separately. So that has a component of transfer price from India to Brazil or Canada and then the local sale. So we're only reporting one sale. So we're reporting only the sub sale.
Okay. And so just going back to Copaxone, so from a profit share perspective, the product is probably not as attractive as you would have expected. And one of the reasons could be there is a kind of large fixed cost associated with kind of selling that product in the market. Is that right understanding?
No, even the price erosion has been fairly comparative. I think to get market share, Mylan has been very aggressive. So it's done reasonably well. I will not say that it's one of our best products clearly. I think that's all I can say. Could have been bigger than what we have. But again, this is all driven by market dynamics, so it's not in my control. So I think if you ask me, I'm fairly satisfied where we are with the product. Okay? Thank you, sir. Okay. Thank you all.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. Anshuman Gupta from Investec Securities for closing comments.
Thank you all for joining on this call. Special thanks to the Natco management. Thank you.